That is too funny. What's good, man? What's going on? Another Friday. We are October. What day is October 10th? Damn, we're moving. Listen, get on in here, man. Now, 6 o'clock. Make sure everything's recorded so I don't get to yapping and I'm not recording. All right. How was y'all week, man? How was y'all week, bro? This is I believe the second week of October. Um, October is pretty cooking. I'm not gonna lie. We're getting some good setups. Gold is doing what it do best as always. It's creating breakout setups. That's usually what we're taking these days. I'm pretty sure y'all are trading breakouts. We just listen. Supply and demand slowing down. October breakout month. Y'all remember last year, October was cooking up, and it's a lot of opportunities. So let's go ahead and get started. Well, how was y'all week, first of all? 5-1, 2-1, one win, one break even, 4-2, 0-3. Not having a good week. 1-1, 3-0. Okay. All right. So yeah. So this week, yesterday was my best day. We did catch a 1-3 on live stream yesterday, and that was amazing. That got me over the hump. The beginning of the week was a little slow, but we ended up ending the week prosper with that 1-3 yesterday. Um, so yeah, let's go ahead and break down these setups. I only traded gold this week, and I mean my secondary instrument is S&P, but it be producing lesser setups, and I'm not gonna cry about it. Gold be coming through. So let's go ahead and break down these setups. All my setups was breakouts like all week. So let's get to it. So Monday we took a breakout on at 8:50 on Monday, and it was a loss. Now, what's the issue with this breakout that we took on Monday that we lost on? The issue is we are trading underneath the 200. I mean, not underneath the 200, underneath the 50 SMA. That's the issue. Okay. Um, y'all know how I feel about trading towards the 50 SMA. It's the cross with your breakout slightly underneath the 50 SMA. The main issue is we got to break the 50. If it don't break the 50, it's usually going to be a loss. So we took this breakout. The first candle was an immediate loss. We was almost to the 1-1. Like if you can see this right here, was close to it, but then that 50 SMA, y'all know it'd be playing defense, and then that was a losing setup. Now the stop loss was only 3 points, so I'm like, okay, it's Monday. Took the first trade of the week. It was a loss, and I was cool. But it ended up creating a second breakout after what is this 9:35. Now, the only reason I didn't take this setup was because of the stop loss size. I would have taken this at any other time. Like we love secondary breakouts. Secondary breakouts usually give us our chances of getting our money back, if that makes sense. So like this setup in particular, 11-point stop loss. Yeah, I could have got in and lowered my contract size, but it was just like, bro, we don't even get like 11 points or 12 points for our stop loss on trading gold. So I really was kind of like cool, but this ended up being a crazy trade. And for anybody that did take this, this thing it made his money back and some. I didn't get in. Some people did get in on the call on Monday with this trade right here. I just was like, no, I'm cool. And some days I will just pass up on setups based on the stop loss itself. It's not that the setup is trash. It's just like I'm not willing to risk that much because I'm always thinking about the loss as well. So I just didn't take the second setup. And then that was pretty much it. So Monday was that unprofitable day for me this week, and I just walked away, which is the hardest thing to do, especially when you can see a second setup winning. It is what it is. So let's go to Tuesday. Now Tuesday, I ended up taking two setups, and this ended up being a break even day for me, mainly because I was trying to aim for a 1-2 on my running contracts, and I didn't get that, and I just was able to cover that first loss. But my whole goal on that second setup is to try to close what I lost on that first setup. So this first setup, we took a breakout at 9:45. Now again, EMAs is perfect. We are a little bit high, slightly. It don't have any higher time frame confluence. Let me go to the 15 minute. Yeah, the 15 minute, we got this low probability demand. It's not that much confluence on it. We really want it to be high probability. Even that demand, well, not that demand, that setup on Monday, it didn't even have any type of higher time frame confluence. So most of the setups that I took this week was just simple 5-minute setups. And that first entry that we took was it was a loss. And then we took this second breakout at exactly what 10:15, and that ended up doing pretty good. Now, again, some people didn't take that second setup and they walked away with the loss. This is the same thing that happened on Monday. So in my head, I'm like, okay, I missed out on a second opportunity to make my money back on Monday. This time, I'm like, you know what? I'm gonna give gold a second chance and get in for a second breakout, and I was able to make my money back. But you just gotta be okay with sometimes you won't have to take a second setup. Like sometimes the first breakout don't perform well. Like how many breakouts like where they break out, it lose, and then they break out later and then they win. Some days you're gonna have to get in for a second time, and that's what I did on Tuesday. And I wish I would have did it on Monday, but I mean it is what it is. Like I was okay with this smaller loss right there on Monday, but I just wouldn't be able to endure this 11-point loss. That would have been tough. But yeah, so yeah, this was a break even day. Both of these setups were just simple 5 minute, 13-minute breakouts. That was pretty much it. It's not really rocket science. I'm gonna be taking the same type of setup next week. Let's go to Thursday. Thursday, yeah, Wednesday. Oh yeah, Wednesday on Gold. Like, mind you, I don't trade on Wednesdays, but I did see some winning setups on Gold on Wednesday. Another breakout happening a little bit after 8:30. This right here, you could have taken this. And mind you, every single day this week, gold been at all-time highs. We've been like, okay, is this too high? Is it too low? Just take the setup with confidence. Like I know we've been trading at all-time highs, but it really doesn't matter when we can still scalp and make money off of just these simple little moves. These three candles, boom, you can make a lot of money off of these three candles into profit. So yeah, even Wednesday had some winning setups like that. That breakout cooked, and even this breakout cooked as well for anybody that took this breakout as well. Like you're gonna have to endure some of this to be able to make money all the way at this swing high right there. But yeah, let's go to Thursday. So Thursday, we took a early breakout. We took another early breakout. I like this setup because we were rejecting the 50 SMA very well. I did like that. We were going with the trend, and at this very moment, all-time highs on Thursday was up here. So I'm like, okay, we got a little bit of room to go up. Um, of course, we don't know if we're gonna reach all-time highs that same day, and they ended up not reaching. But I like this setup based on the candles that we're printing. So we got this breakout candle at 825. I initially did not hit buy right there. I waited for them to do a little wick right there to see, okay, how are you gonna respect this 50 SMA? And then they gave us a little doji right there. And I'm like, okay, that doji is pretty good. And once they actually closed right there, I'm like, yeah, I'm gonna get in for a buy. And then that was pretty much it after that. Like 1 to 3, I closed a little bit at 1 to 1, didn't close anything at 1 to 2. And then we went for a 1 to 3. And then that was pretty much it. That was pretty much it. So yeah, so my whole week was consistently of breakouts, and that was pretty much it. That's that like in this time period, like whatever that's occurring the most, you're gonna want to just trade that. Like it's not about like, dog, I only want to trade supply and demand. Like this whole month, we haven't really seen supply and demand. You feel me? So we got to trade breakouts. And if breakouts start slowing down, then what else we're going to bring out? We're going to bring out liquidity graphs. Now, for me, I feel like liquidity graphs have been performing very, very low in this last quarter since we just started because it's been horrible in August and in September. But yeah, I'm gonna stick with breakouts. I'm just telling y'all that right now. So when we have our live streams next week, what is Doyle looking for? He's looking for a breakout until it starts slowing down. Until breakouts start slowing down, listen, that's what I'm trading. Like seriously. All right, let's go ahead and take this off. And I know y'all got questions or any stuff that y'all took. Let me go ahead and pull this up. But yeah, overall, this was a good week though. Like just another October week. This is great. Let's take this off. Okay. Oh no, yeah. For my people that's into cryptocurrency, listen, it's time to buy. I don't know if y'all see what's going on, but after I got this call, I'm about to be buying some cryptos. But that's just another topic for another day. But yeah, it's that time. Stuff is dropping. You need to be buying. All right, let's go AP right here.
You,
Yo, what's good?
yo, what's up?
What's going on?
Got a couple of questions. So, I don't normally up my risk on my setups. I normally just keep it the same or I lower it. So, I was just thinking like, is it a good idea to treat every setup with the same risk?
Mm-mm, absolutely not. Absolutely not. Mm-mm. So again, depending on the EMAs, the higher time frame confluence, okay, the 15-minute confluence, maybe. Are you trading 1 minute breakouts or are you trading 5 minute breakouts?
Um, Supply and demand and breakouts with confluence.
Okay. So supply and demand, and you said breakout with confluence, like
Yeah,
that's all you
15 a
look at.
15-minute breakout structure. 15-minute demand or supply with a 5-minute MA breakout.
Okay. So I think if you're trading supply and demand, you're gonna want to lower your risk when the EMAs look horrible with supply and demand. Now, you can have your risk to, like standard when the EMAs are perfect, but like when the EMAs are horrible and you train supply and demand, those usually like perform horribly. So I definitely don't recommend to have every single setup the same risk. Absolutely not. I'm not doing that. I don't recommend people to do that because supply and demand haven't really been hitting that much, even with 15-minute confluence sometimes. So I would base that off of how beautiful the EMAs look on your entry time frame, whether you want to keep it standard or lower it. But like if you wanna up the risk or you want to try to like add to the position, you definitely want some sort of higher time frame confluence. Although even this trade that I took on Thursday, did it have any higher time frame confluence? No, it went for 1 and 3 off of 5 minute. So whatever you do, still leave running positions so you can see if you can get that 1 to 4, that 1 and 3, or whatever. But keeping the risk the same every single setup, I feel like that's just like you can do that, but I personally feel like every setup is just not equally the same, so it don't deserve the same risk. Like the setup that had 11 point stop loss on Monday, do I put that same risk on the setup that have a 3 point stop loss? Like, no, I'm not gonna do that. So yeah, I would definitely recommend like switching up your risk management based on stop loss size, how beautiful the EMAs look, and just the overall quality of the setup. Like just you gotta judge it. That's why we have that little risk management video so we can distinguish. Okay, what is a good setup? What is a C plus setup? What is a low quality setup? Because some days you're gonna be upset at yourself that you lowered your risk on a beautiful setup or you lowered your risk on something that ripped. I'm not saying that every single setup is going to rip the ones that you choose, but the only way you're gonna find out if you're gonna make a lot of money is if you leave that runner. So yeah, definitely don't keep the same risk on every single setup. That's just my 2 cents. People could disagree with me on that, but I just feel like every setup is just not equally the same. So yeah.
All right, yeah, I got you. So, me personally, I'm not that good at cutting losses because they don't sit right with me when I lose and they win.
Hmm.
Um, but I do know how to lead runners. So, I figure I know my win percentage is a little bit lower because I go for a 1 to 2 every time. Is it possible to be consistently profitable without cutting losses?
Yeah, of course. Of course. But the thing is, like, if you're gonna be going for a 1 and 2 consistently, your results is gonna be different from people that is going for a 1 to 1 first and then going for a 1 and 2. Like, I'm not saying that it's like you can't be profitable with going for a 1 and 2 minimum. You can. However, those days where it go for a 1.5 and you're up and in the reverse, that's a full hit. You know what I'm saying? Like, so I would advise if you want to go for a 1 or 2 minimum every day, if it go past a 1 to 1, move stop loss to break even. Or if it go past a 1.5, move stop loss to break even. Like I would rather for you to have more break even days than losing days because you already in profit. It's just not reaching that target, which is that 1 to 2. So yeah, like I know a lot of people be wanting that higher RR every single day, but it's tough to do, especially when we trade on lower time frames. We trade near all-time highs. Like that is tough. So you got to take what the market is going to give you, and every day even gold is not moving beautiful every single day. We might get some choppiness. We might, S&P, NASDAQ going sideways pre-market. Like it's just like we can think that we will want a higher RR every single day, but we got to really see like, okay, how well does the market moves in one direction for a short period of time? Because we on a 5 minute, all we trying to do is have a direction right at a small period of time within that day. Like that's happening for the most part for gold. That's why we like gold because they usually go in one direction for a long period of time. But like instruments like S&P, instruments like, some currencies, some, GBP, USD, stuff like that, they're not just extremely going in one direction for at least an hour or at least 30 minutes. Like it's usually choppiness, hitting stop losses, liquidity grabs, stuff like that. So I just would advise you to at least like if you want to go for that 1 to 2 minimum, just move stop loss to break even and have more break even days versus the full hit. Because it's gonna be some day. I know it's been some days where you was close to that 1 to 2, and then it just didn't hit it, and then it just reversed all the way, and then stop loss hit. Like that's going to happen. You know what I'm saying? That's why I made it a rule to close on that 1 to 1 first, because I used to do stuff like that. Like, and this is not even with breakouts. This is just me trading fibs. Like when I was working my job. Like some days I'll try to minimum go for a 1 to 3. It just wasn't working out some days. Some days it would, but for the most part, the market don't care about that long target. So I just learned to just take what the market is giving me and try my best to take quality setups as much as I could. So yeah, that'll be my answer to that.
All right, I'm gonna try that out this month. I got you.
All right, that's all you have?
Yes, sir.
All right. All righty. Let's go to the next person.
What's up, Doyle?
Yo, what's good?
Can we go to Russell on Tuesday?
That's on Tuesday.
Um yeah, 9:45 your time, AM.
40.
It was a breakout. Yeah, and it was with a 15-minute demand, I think. I just wanted your opinion on the setup.
Okay. You said 9:45, right?
Yeah.
For a buy?
Yeah.
Okay, so this right here, which it was a loser for sure. It was a
Mhm.
New York reversal for sure. Let's go to the higher time frame. I want to see what happened right here. Maybe this was a supply zone. I don't know. Okay, maybe let's go to the 1 hour. Yeah, it got to be a reason or something. Oh, okay. Interesting. All right. So this thing was reacting off of a 1 hour supply right there. This actually just looking like a head and shoulders pattern on the 1 hour. Let's go to the 4 hour. Let me see. And yeah, this is all-time highs at this moment as well. See this is the tricky part about trade. This applies to anything that you're trading. Like the closer we are to all-time highs, it can just reverse at any moment. Like at any moment, it can reverse. Now, this is a 1 hour supply zone, and if you go to the 15 minute, can you scale it down on the 15 minute? No, let's go to the 5 minute. Can you scale it down? Okay. So there's no gap, but this is the only one that have a gap right there. And as you can see, it just rejected perfectly off of that. So yeah, like it literally just reject off that 1 hour supply. So this is a 1 hour supply zone. You scale that down to the 15 minute. You can't scale it down. Go down to 5 minutes to see, okay, where's the gap? And the gap is right there, and that's literally where they rejected from. So it's tough to catch the reversal. It's tough to anticipate the reversal, of course. Like
Mhm.
I would take a loss and stuff like this. But if I'm looking at the higher time frame, because the only way it moves like this happen is based on higher time frame confluence. Like for the 5 minutes to do something like this, especially if it goes against the EMAs, it's probably something happening on a higher time frame up that's causing this to break through all the EMAs. So, did you? Well, I'm pretty sure you probably didn't try to get in for a sale. You just took the loss and then
No.
walked
I
away.
just yeah, I took it off and just walked away.
Yeah, that would be my advice on this setup right here. This ran into a 1 hour supply, and then if you scale that down to the 1 minute, I mean the 5 minute, it just
Hmm.
rejected it perfectly, and then that was pretty much it. Um,
All right.
the thing is, you're going with the trend on the 5 minute, but that doesn't mean that the trend can reverse. That's why like the EMAs only hold so much weight, especially when like you're trying to catch a reversal. Like trying to catch a reversal on a 5 minute is going to look horrible. But then if you look at the higher time frame, that could be the reason on why these EMAs are starting to shift based on the prices going against the EMAs. So yeah, I mean, if,
Mhm.
if I'm not looking at the higher time frame, I'm taking this setup and I'm taking a loss on it.
Okay.
110%. Sure.
Now, so I had a question. You know how on the second setup on Monday with gold, how you said the stop loss was too big?
Hmm.
I know you don't risk your account and percentages, but like for people who do, would you advise them to take that setup? Is that too big of a even though like the stop loss is not going to really matter because we risk our setups and percentages. So I
I
was going to
mean,
risk 1% regardless. So is that still
yeah.
too big or
No, no, no. Okay, so again, I don't risk my common percentages. People that
yeah,
trade prop firms risk their common percentages because y'all got to make sure y'all not go over y'all drawdown period or whatever. Y'all know the rules for these prop firms.
yeah,
If you take a setup like this, like say if you take a loss on this setup, and then you say, dog, they just did a 13 main breakout that broke past the 50 SMA. This looked just like that gold trade that I passed up on. Like it
Hmm.
looked kind of similar to it, but it just in reverse for a sale. If you want to take this setup, but you want to put the same risk on just like that first setup, you
Yeah.
can do that. But if you take that full hit, how much is that going to be worth, depending on the percentage that you want to put on? So
Hmm.
you can do that. Like I could have taken that trade on Monday again if I really,
Hmm.
really wanted to. I could have, but I'm like, I'm cool. Like I don't want to. I'm just good. And it ended up winning. Now, if I choose to do that, then that's just what I choose to do. But yeah, you could definitely, if you want to put 1% on and then you lose 1% and then you take this setup and you got another 1% on and that hit, then the whole goal is to get a runner so you can actually have a profitable day. Yes, you can do
Hmm.
that. Just make sure that your lot size, if you trade forex, or if your contract size makes sense on this trade. So yeah, you can do that for sure.
All right, man. Appreciate it.
Yep, no problem. All right, let's go to the next person. Anthony Vargas.
Yo, you
What?
get
Oh
oh
yes, what's going on?
chilling, bro. Can we go to Nas real quick? I got just one setup on Monday.
Okay, let's
It
do it.
was a 13 EMA breakout with the liquidity grab uh
Uh,
on the 10
at
o'clock candle.
10 a.m.
Yeah, yeah, 10 a.m.
Oh yeah, that thing was a loser.
So this was near all-time highs. That wick, like that top candle at 8:10 was all-time highs.
Okay.
Now the 15 minute, I this kind of leads into my next question, but we was running into the 13 EMA on a 15 minute. And I feel like that low key was the factor as to why this might have lost. I just wanted
Mhm.
your opinion.
Yeah, no, definitely. I feel like when we're taking a breakout on the 5 minute, but that 15 minute is still underneath the 13 EMA, like that's like a deal breaker. Like if they don't break it at this point, if they don't break it at this point, they just gonna consolidate on the 5 minute before they finally go back up, if that makes sense. So, yeah, that definitely plays a role. Like if you take a breakout anywhere up in here on the 5 minute or even on the 1 minute, it don't even matter. Once you get to that 15 minute, 13 MA, if they don't break it or close past it, they probably about to just reject and continue back down. So that definitely plays a role for sure. I've lost on setups that look just like this, where the 15 minute, just the 13 MA didn't break. Let me go to the 5 minute real quick. So, like, you gotta tap at the 200 EMA. Like the EMAs didn't cross. Now, another thing I do want to say when it comes to 13 main breakouts and the EMAs is aligned, like 13, 50, the 200. Pay attention to how close the 50 is. Like really do, because look at this breakout over here at what 725. Look at that candle and then look at this candle. Look at how close they are when the breakout is happening. Sometimes when the 50 SMA is close, it will start to curl, but it won't curl initially off that breakout candle because obviously we need more candles to print for it to cross. So when the 50 SMA is kind of close to the 13 MA, but they didn't cross yet, but they kind of close, I'll be a little bit iffy. Like you can backtest this stuff. Like when you get a breakout, but the 50 SMA is close, it looked like it's about to cross, but they haven't crossed yet, but it's still kind of close. Sometimes those be the ones that don't perform well, and they would end up staying underneath the 13 MA, and then it will finally cross. And then you see later in the day, it give a second one right here at 10:45, and then that one wins. Like it's crazy because it looked like they just did another liquidity grab as well right here. Like they grab liquidity again and then went up. So my advice on these type of setups is to pay attention to the 15 minute, like you said. That was definitely a role on why this lost. And the 5 minute, the 50 SMA being a little bit too close. Like just because a breakout is happening underneath the 50 doesn't mean that it's horrible, because look what it did. It won. But our whole job is to figure out, okay, are we taking a breakout that's a good time when volume is coming in? Like what happened within that day for me to be taking this breakout? And I feel like if I'm looking at this, the issue is also all-time highs again. That's still the issue in this day as well. So I don't feel like this is a horrible breakout at all, because I feel like this is something that I would potentially take. But pay attention to that 50 SMA though. Like we got to put more emphasis on that, because most of the time, it genuinely just works against us if we trading towards it or if it's near. So yeah, that'll be my 2 cents on that. Just be careful with that 15 minute just staying underneath the 13. And if it do break, then like hypothetically, let's just say this setup actually broke the 50 SMA. I mean, it broke the 13 EMA on the 15 minute, and then you took this breakout right here. It would have ripped. Like it would just been a winning setup, but it didn't do that. You know what I'm saying? So it's hard to predict whether we're going to be consolidating underneath the 13 before it rips, because that's hard to predict. But it's also hard when the all-time high is just so like close. So yeah, I feel like if you're not going to get back in, then you got to just leave it alone, honestly. Yeah.
But I appreciate it. And that leads me into like my next question. So
hmm
I've noticed, like you said in past webinars, like the 5 minute and the 15 minute are like twins, like they, you know what I'm saying, coincide with each other.
hmm
So in your opinion, like with scalping, is it more beneficial to pay attention to like the 1 minute, the 5 minute, and the 15 minute versus the 1 hour and the 4 hour, or like it's just situational?
So with breakouts, if you want to look at the 1 minute for confirmation to take a 5 minute breakout, you can do that. Another thing that you will want to look at on the 1 minute, if we are trading 13 minute breakouts on a 5 minute, is to see if the 1 minute EMA curls against your setup. Like if you're taking a buy on the 5 minute for a 13 minute breakout, but the 1 minute just curled downwards, that's a sign that that could be a losing setup. So like that, like if I was to look at the 1 minute, because I don't really trade the 1 minute like that. If I was to look at the 1 minute, I just look at it just as a signal to be like, okay, this could be a losing setup, or this I should stay into this setup based on the 1 minute candle and the EMAs and how it's printing. But I don't care too much about the 1 minute if I'm not going to be trading it. So some days I don't look at the 1 minute at all, but some days I will glance at it just to see, okay, I'm in this 5 minute setup. How well does the 1 minute look? That's about it. Like far as like, especially since most of us we don't try to cut losses with breakouts. We just simply stop loss of TP. But you definitely want to look at the 1 minute if you want to gauge whether this trade is worth holding or worth just getting out of. That could definitely be a signal. But as far as like just trading simple 5 minute setups, you don't need the 1 minute chart. Like you don't want to overcomplicate it. Like I don't want people to get overwhelmed every single day they show up to the market. Like even when I'm on my live streams, like I'm not just like I'm looking at two instruments. Like I'm saying focus, two instruments. I don't want to be all over the place. Like I'm just trying to keep it simple. So like I know like when you're analyzing every single day, like sometimes people make their whole checklist process or whatever you do daily overcomplicated. Like I'm just keeping it super simple. 5 minute setup look beautiful. I'll take the setup, and then once I take the setup, I'm gonna look at the 1 minute to see, okay, is the 1 minute looking pretty good? What the 15 minute EMAs look like? Where are we at on the 15 minute? And then I'll just go from there. So yeah, bro. Like you can look at those three time frames, but the 1 minute can be noisy for a lot of new traders. Like so, I advise people if you want to look at the 1 minute, practice on it on demo a little bit. Like go on a live account and you brand new on the 1 minute, you just ask them to just blow money. Like seriously. So yeah,
Yeah, so
that would be my
pretty
process for
much
sure.
like pay attention to like the 5 minute and 15 minutes. I don't trade the 1 minute either, but like you said, I look at it to like see where we're at. So
Yeah.
you think so just pay attention to the 5 minute and the 15 minute and then see like the 1 hour and the 4 hour where we're at, like market structure and like zones and stuff like that.
Yeah, but okay, but this is the issue though. Like we're at all-time highs. So you're gonna be looking at the 1 minute and the 4 hour with no information. That's the
Yeah.
tough part about where we're at in currently. So it's not even about the 4 hour or the daily because we so close to all-time highs, there's no information. So I would advise people to look at the 15 minute, look at okay, where's the nearest gap? Where's the nearest zone? Did they take out liquidity? Some days you're gonna have to only mark up for the 15 minute. Like maybe the 15 minute only have some type of information that we can work with. Like we can't just like some days I am just trading the 5 minute alone, but I'm still trying to look at other clues so I can get a directional bias. Because every single day, like we say, oh, we're gonna be bullish on gold, but what if we be bearish? Like you gotta be prepared for both directions every single day. So I'm looking for something on another time frame to give me some type of narrative to go in that direction. Some days we don't get that. But for the most part, it's more difficult near all-time highs for sure. Like so, even if we look at the 1 hour and the 4 hour, that doesn't mean that we got any information to go for a buy or a sell. So the 15 minute and your entry time frame is going to be like your bread and butter when we're near all-time highs for the most part.
I bet that's all I have, bro. I appreciate you.
Yes, sir. All right. I'm new to the group. Where can I find a breakout strategy? Go watch the webinars of the end of 2024 all the way up until now, and then watch the resources video of the strategy of the breakouts. Yep, that's pretty much it. And show up to the live calls. I feel like the live calls are like super, like people get to see like me making a decision real time. I'm not thinking like, like I feel like that is like super helpful. If you brand new, watch the webinars, watch the resource videos, show up to live streams. Like I feel like those three alone, like you're gonna be able to like, okay, like this is what he doing. I can do this stuff. Like it's not a problem, you know? In one of your videos, you say you dropped it for the people that don't have the course. Where's your course? The course? The course is discontinued. Watch the videos inside the Discord. Listen, all the updated information is in the Discord. Like the course is that ended at the end of 2024. Like that, people downloaded it, they still have it. Some people still download it and have it, but the new updated information is here. All right, my fault, y'all. Let me go ahead and go to the next person. What we got? We got Dwayne right here. All right, there we go.
Hey, Doyle, how you doing?
Yo, what's going on?
Can you go to gold uh Monday at 4:45 a.m.?
4:45. 4:45. Okay, that would be this. Okay, this demand zone right here. Okay.
Yes, sir. Um,
Okay.
yeah, wanted to go ahead and get your thoughts on that one. Now, I did not take that one.
Why? Why not?
Well, it was at all-time highs. If you break down that setup, it had a 1 minute, a 5 and a 1 minute on that one. And right below it, it also had a 15, a 5, and a 1. So I was trying to just be careful in terms of it's already at all-time highs, and I didn't want it to do like a fake out, so
Hmm.
I didn't take it.
Okay.
So I wanted you to kind of go over it, see if it was something that you would take or
Okay.
not.
Okay. So, this setup, this line right here is all-time highs at that very moment. So that will probably scare out a lot of traders to be like, man, I'm taking a breakout right here on a 5 minute. We right there. Like I'm not gonna lie to y'all. Like we're gonna be dealing with this for the rest of the year until the market start to drop and gold start dropping and all the indexes start dropping. This is gonna be something that we're gonna encounter a lot. We're gonna be trading near all-time highs. We've been trading near all-time highs since I want to say the beginning of September, like into August. I don't know, but this has been a daily issue, and I feel like us trading near all-time highs is causing people to second guess the setup, or they're second guessing, the strategy, or the confidence is not there. I'm telling you this right now. You got to just hit buy. Just hit buy. Like just hit it. Like even this week, it was some stuff I'm like, man, we so close all time highs. I'm still gonna take a setup and it ended up working out. You'll be surprised how well gold wins when you just take buy opportunities. Buy opportunities win way more than sell opportunities on gold. We all know it. We all know it. Like whether the 50 SMA crossed or not, it doesn't matter. When you take a buy opportunity on gold, for the most part, if we talk about probability and the numbers game when it comes to trading, gold will win more when you take a buy versus a sell. Now you can win going for a sell, but it's just like we want to win when the probability is on our side. Now this trade right here, we got a breaker structure, a demand zone, it got a gap. The 13 EMA breakout looked like it won, but you didn't take the setup all because of all-time highs, correct?
No, not just because of that, because in that same zone, that 5 minute demand, it had a 1 minute demand, and also below it, it had a 15, a 5, and a 1 minute. So I
So
would have
so we don't really, the thing is like a 5 minute setup is always going to have a setup underneath it. Like whether you see one that's all the way over here that got a gap, or even down here got a gap. We only care about the most recent zone. That's it. So let's just say, let's go to the 15 minute. Okay, the 15 minute, we got a demand zone down here that's untapped. I don't care about it because we're not at that zone. We never know where they're going to stop at whichever high probability zone, whether it has a gap or not. We don't know where it will stop at. Okay. Like we don't know whether it has a gap or not. So if I'm looking at this, okay, this is marked up and it didn't tap, but I'm not going to be afraid to take this setup because it never tapped the zone. Sometimes there be imbalances in the market that never reach. That happens too. Sometimes price come down to our demand zone, but then miss our demand zone by like 1 point, and then it goes up and rips. How many times that happened? So it's just like if there's gaps or imbalances underneath your setup, that doesn't mean that you can't take this current setup. So I don't even like to be honest, I don't really care if I'm above a 15-minute demand zone or above a 5-minute demand zone and I'm taking this. I'm still taking the setup. You like we only trade the most recent zones. Those are the ones that hold the most. So yeah, I just feel like okay, this is a 5-minute zone and you can scale this down to 1 minute. But even if it don't tap on a 1 minute, that doesn't mean you can't get into the trade. Like you can still get into this trade. You can get in off the break of the candle. You can get in off of the 13-minute breakout. Candle close at 4:45. There's a lot of ways to get into this trade. Even on a 1 minute, let's say if you wanted to take a 1 minute breakout, you would have lost, then you would have to get back in. So this will be an entry for the 1 minute, stop loss hit, and then it would have closed back above. You may have to buy again right here or even buy right here and then put stop loss underneath there. So you can still trade 1 minute breakouts with a 5 minute demand zone sitting right there. Like it's a lot of ways to get into this trade. We just have a reason to take a buy based on this zone. Now again, all-time highs, I understand like all-time highs is something that really kind of like is an issue, but take the setup, trade what we see. Like I probably would take this. I'm gonna be honest. Like if I didn't feel good about this breaking the counter entry, I'm getting off the 13-minute breakout. Like for a fact. So I feel like you should have taken this. No cap. It looked beautiful.
Yeah, I'm not gonna lie. I was beating myself up the entire Monday because that was the only setup on London that Monday.
Hmm.
So I had that thought in my mind pretty much Tuesday. I didn't take no trades on Tuesday, but Wednesday, if you can go to gold, gold had um a demand set up at 2 a.m.
On Wednesday.
Yes, sir.
Okay, you said 2 a.m. We all the way over here. Oh, it's a nice one. Talking about this breakout right here.
No, it's a demand setup.
Oh, this one over here. This one right here.
Yes.
Okay. And let me hit the replay mode because I want to know exactly where is this at on the higher time frame. Is this all-time highs right here at that moment?
Yes, I think so as well.
Yeah, I think that is. Okay, so sheesh. Yeah, what is this? This is Tuesday going into Wednesday London session. Then that thing, yeah, this is super high. So you took this. Why didn't you take this breakout right here? What's wrong with this? Or you just don't trade at that time?
Yeah, that was yeah, I don't trade at that time,
Oh,
but
okay.
yeah, I just saw the that demand that came down, and I said, well, I missed out on Monday because of that same reason. So let me go ahead and take a chance on it this time.
Mm-hmm. And
But it did.
you lost.
Yeah,
Yeah, this is a setup that looks just like that gold trade that people took after that Thursday win that we got. Like it was like a high demand and then it just lost. So yeah, this is a trade that is something that created resistance in real time. I feel like these are the setups that we got to be very, very aware of. Like these are setups that be creating a situation that causes us to lose in real time. So like this can happen for breakouts. This can happen for a lot of stuff where we get in for the break of the candle and then they just start creating resistance. Now with supply and demand, if I see this and then they close underneath the 13 EMA, I'm probably cutting loss. I'm probably cutting a loss. Only because supply and demand, you shouldn't even be creating resistance, especially at this point in time. So like this is all-time highs forming a crazy resistance right there. No wonder it dropped. Now the annoying part about this is it ended up continuing up after the fact. And then it's like getting really choppy. Yeah, London session was horrible on Wednesday. But yeah, other than that though, like I feel like it lost based on real time resistance. I feel like even on some of our supply and not supply and demand, our breakout setups, when we see that it's forming wicks against us, like most of the time we take a hit for sure. But yeah, bro, like it's unfortunate that this same setup that you passed up on a couple of days prior to this won, and then you take this and then this lose. Stuff like that is going to happen as well. I'm not going to lie, especially with this resistance right here, all of this, yeah, all of that, it just definitely it wasn't ready. It wasn't ready at all.
Yeah, I can take that, but everything else looks good. Like the 13, everything else lines up in your opinion.
Yeah, yeah, this is a good 5 minute demand zone. It just again, it's pretty high. It's been moving up for a while too. Like this, I mean, and again, it's all time highs as well. So it's all risky, man. Like I'm not gonna lie, like higher time frame confluence is not gonna be happening if gold is gonna be pushing like this, and we're gonna be trading near all time highs. So you are essentially your whole goal is to have a smaller stop loss when you are trading near all time highs. Like I feel like people just like we gotta understand that. Like when we trade in near all time highs, I don't want a large stop loss if I can be able to get in aggressive or get a smaller stop loss in, just so I can get my first target hit faster. Like because we want to be more realistic. The larger the stop loss and we're near all-time highs, that's risky because now our targets is all-time highs. And that's dangerous as a scalper. So I feel like in these times, your whole goal is to get a tight stop loss. Like let's just get a tight, let's get anything under like 5 points for gold. We need something like that. Because when we get those longer targets for it to keep going up and we're near all-time highs, that's asking for a lot. Like seriously. So yeah, that's about it for this setup. The setup looked pretty good. It just again it's high in that resistance form, and then that was pretty much it. So
Okay, all right. Well, I appreciate you, man.
yes, sir. All right. How do you use higher time frame confluences to place lower time frame trades? So we do have webinars on 15-minute zones, and you can scale that down. But also, we can use 15-minute supply and demand zones and enter off of 5-minute, 13-minute breakouts. So again, our main entry is breaking a candle and the candle close of the breakouts. But essentially, the only higher time frame confluence that you're going to find on the 1 hour, the 4 hour, or the 15 minute is supply and demand. Of course, we could look at the higher time frame zone to see, okay, where's the EMAs at? Like, I love when the 15-minute is trending strong. Like this right here. Now let's go to the 15-minute. When the 15-minute is like this, you see how like we've been trading above the 13 MA for quite some time. The 5 minute will cook some beautiful breakouts right here. That's why like we want to look at the 15 minute to see, okay, are we above the 13 MA on the 15 minute? Because if it is, we can go down to the 5 minute and see some type of breakout opportunity somewhere up in this little bullish trend. And if for my people that really want to go crazy, you can go to the 1 minute after seeing that the 15 minute is above the 13 MA, and you can get hella opportunities in that circled area. Like seriously, like yeah, hella opportunities. Like you like down here for a buy, another buy. Um, it's a lot of opportunities. But again, the issue with the 1 minute is timing, of course. Like the timing is just super important. But we definitely want the EMAs to look beautiful on the higher time frame zone. Okay, let me go ahead and go to SJ, and then I'm gonna go to George, and then we're gonna try to wrap this up.
Yo,
Yo, what's good?
what's going on? I took 3 losses this week. I ain't even go front, bro.
What's up you
So
took?
I took the setup on Nasu just how I went over on Monday.
Okay, now it's on Monday. Let's go to it.
It was the same breakout, the 10 o'clock.
Oh, okay, yeah, yeah. We just answered that one. Not gonna lie. What was
Oh
the
yeah.
second set? What was the second setup that you take on that?
The second setup was the same goal setup we took on Tuesday. But I never had got back in though after like it stopped for me, I
Oh,
don't know.
okay. Let's go to that one, bro. You said on Tuesday? Oh yeah, that first one. Yeah, that first
Mhm.
one, this one right here, again, just like I said, how they formed a real-time resistance. We was in this trade and all we saw was just wicks being formed as soon as we got into the breakout, and then we took a hit. So I actually let's go to the 1 minute. Let's go to the 1 minute on this breakout because if the 1 minute is curling down, that was probably our number one sign to potentially get out of this trade. So let me go to this setup right here that we lost on Tuesday. And let's just go to the 1 minute. Now, if the 1 minute is curling down, that's that's probably our signal to be like, okay, this is probably going to be a losing trade. Let's go to the 1 minute. Okay, as you can see, what we got on the 1 minute, we got a cross. But on the 5 minute, there's no cross. Like this is important, y'all. This is super important. When you trade the 5 minute breakouts, just go to the 1 minute and see, okay, is the EMAs curling in our favor or is it curling down? Because if it's curling down like this right here, that's the number one sign right there that they probably don't want to go past this area. Now, support and resistance is more clear on the 1 minute because there's more candles. So as you can see right here, this is a trade that we took. This thing is forming a resistance right there at the 50. Candles constantly closing back underneath the 50, and then we eventually lose. So let's just say we looking at this on live stream and our stop loss is right there, and we are on, let's just say 10:04 candle. We need to be making a decision whether we want to be cutting a loss up in here from like that eight at that 10:04 candle all the way to right there. That would be probably my advice. I'm trying to cut this type of trade out. We can go over some more losing setups. Let's go. What about that third setup that you've lost on?
Third setup was today on S&P
Oh man, you traded today. Oh man.
because I was that my other question. The reason I ain't like re-enter on the gold setup was because like I'm thinking to myself like I got the whole week ahead of me, so it's only Tuesday. I don't want to take another setup and lose. You know what I'm saying?
Mm-hmm.
But then
Yeah.
I heard you say you was like I like taking multiple setups early in the week. I was gonna ask like what's the like mindset behind that?
Um, I don't do it every week. Like people be shocked when I take a second setup. Because I like to just be one and done. Like on Monday, I was one and done. I didn't take a second setup, but on Tuesday, I took a second setup. I It really just depends on a case by case situation. I do like to take multiple setups earlier in the week, and I like to go a little bit lighter later in the week, depending on the P&L and how my performance is going. But I like to go with multiple positions earlier in the week because I just feel like later in the week, the market just don't be producing me good setup as just an individual. That's just maybe just be my preference. But I feel like when I have a good start to the week, it just makes the end of the week less stressful versus having a rough start at the beginning of the week. Now I gotta get something crazy on Thursday, or if I'm trading on Friday. So I just personally just I like even next week, like I'm focused on let's have a great start. Like Monday and Tuesday, like I'm focused on let's at least get one of those days to have a runner. If I can catch a runner on one of those days, I'm starting the week off pretty strong. Okay. If I win a setup and then I lose a setup and I'm kind of break even or kind of negative Monday, Tuesday, that Thursday, I'm really hoping that I get a runner. And that's what I got this week. I got that 1 to 3 on Thursday. I'm like, yes, got what I needed. And in the week profitable. But the beginning of the week, I feel like that's the time to actually, okay, I get to pick and choose whether I want to take a second setup or not. I don't want to place too many trades later in the week because it's nothing worse than going into the weekend and you're down. Like that just be so annoying. So yeah, I don't know. That's just something that I like to do. Like Monday and Tuesday, like I would have the flexibility of actually, going for maybe two setups in a day or two setups on Tuesday or something like that. Only because we just starting the week off. This is a fresh week. I'm not caring about what happened this week. It's a whole new week, so I just want to just give myself opportunity to, try to make my money back if I do take a hit or two. Um, so yeah,
Fact.
yeah. What was the setup that you took though? Because I don't think you showed me. You said on Friday on S&P. What setup?
It was the I'll tell you right now. It was a breakout. It was like after 10 o'clock, like probably 10:05, 10:10. Yeah, it's the
Uh, this 1020 right here.
no, 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 go to the left. It's a loser. Yeah, right there. Yeah.
This one right here.
Yeah,
So you took a buy right here and then put your stop loss underneath this candle. I just wanted to make sure like we on the same page. So you took a buy right here, like as soon as that kind of closed at 10:05.
yeah, yeah.
Okay. All right.
Cause I seen it had a 1 hour demand, and I scaled it down to the 1 minute, so it tapped the 1 minute too. So
Okay, let's go to the 1 minute. Like what's going on in the 1 minute? Um, ooh. Let's see if this actually held. Yeah, I know how the 1 minute is. If it's something that's going to be stopping it, it's usually a supply zone or the EMAs is going to curl. Now, my issue with this setup is it don't look beautiful on the 5 minute. Okay, like the 50 SMA is crossed upwards, yes, but look at where your 200 is in between those two. That's a red flag. We again, the order is what? 13, 50, 200. The 200 is not in the right spot right there. No, sir. The 200 is supposed to be right here. That's when we know that okay, like, this is a strong, clear trend. When it's not like that, okay, they could curl, but we gotta take that into consideration for sure.
So you don't think that could be offset about a 1 hour demand or nah?
Oh, this is a 1 hour demand.
Yeah.
You sure? You sure? It look like a 1 hour supply, bro. Okay. You sure? Oh, you
I
talking
feel
about? Oh, you talking about
yeah.
this right here?
Or
Oh, okay. Yeah, it's a lot working against this setup right here because yeah, this is a 1 hour demand, but that's also a 1 hour supply too. No,
that's what I heard you.
no cap. I'm not gonna lie. So like when we got, and that's another thing. I feel like well, older webinars, when we have two zones happening at one time, your best bet is to leave the setup alone or take a chance on a direction. Now, the issue with taking a chance on a direction is now that we have two zones working against each other, we're not sure on the direction. And when we're not sure on the direction, we are already in the probability of losing, if that makes sense. So, like, what I remember when I was trading like supply and demand like every day, and we would see like a 15-minute supply zone, but we also created a 5 minute demand zone. Like, that's in conflict with each other. Like we don't want like any zones to be in conflict with the direction that we want to take. So when I see stuff like that, I either lower my risk, pass up on the setup, or take a chance on the setup that I feel like is going to be the dominant direction. And some days you're going to be wrong. And I feel like this situation, all-time highs at that very moment, that supply on a 1 hour, it just held so well right here. And another thing, it's a cross on the 1 hour as well. So 50 SMA cross, 13 cross downwards, but that demand zone right there. What's the likelihood? The likelihood is when the 50 cross, they like to hold. So the 50 cross downwards with that supply. Now the supply don't have a beautiful breakout structure. It really don't. But that doesn't mean that it's not going to hold. And that's the issue with trading with all-time highs because we don't know, okay, yeah, this is kind of trend, but do we know if it's going to hold? We really don't. I'm going to be honest. Now, if I go to the 5 minute EMAs is not as beautiful. If I'm going to be completely honest, it's really not going to be that beautiful. Let me go to the 15 minute. Yeah, this 1 hour zone right here, like this is a scaled down zone. 15 minute. Let's go to the 5 minute. Yeah, you can even scale down all the way over here too. Yeah, I feel like this was just influenced by that supply zone, no cap. Like it's just that thing. Let me fast forward.
And then I think I had
Oh
threw
my
a
God.
oh no wait, that's another breakout right there, right? After like the little hammer candle.
Uh, what this candle right here at 1020?
Yeah.
Yeah, it is. It
That hit
is.
101.
Let me turn on the VWAP. I need to
That's
see
just
where
that's like another thing from the Tuesday
the.
setup how I could have re-entered and you know what I'm saying?
Yeah. This
But
I feel like this setup right here, they wanted to reverse. Like, because even like let me just take all this stuff off. Even if they actually pushed up and gave you a 1-to-1, we can get our 1-to-1 and still have the direction wrong. Like let's just let that be super clear. Like even if you get your 1-to-1 on the 5 minute, you can still be wrong, but still make money. So let's say if you did like, you got in right here and that candle gave you your quick 1-to-1. They still didn't even want to go up there. So like, okay, stop loss would have been 4 points on S&P. You caught your 4 points. Okay, cool. You caught your four points on that little wick, and then that was pretty much it. But the direction's still not right. You know what I'm saying? But they gave you what you wanted, which is your first target, 1-to-1. But the real dominant direction was for sales. And it's just like I feel like that 1 hour supply was just holding so well right there, bro. No cap.
yeah.
Yeah.
So you think I should just work on like looking where the high time frame zones is at and just
It's
walking around there?
especially after 9:30, you need to be looking at the higher time frame zones just to see, because any day the market can just reverse and do something sporadic and random. Like we know the market is super imperfect, so like it makes it look perfect, everything can look beautiful, and then boom, like Trump will just say something, and then the whole market will just shift the other way. We gotta be adaptable to the point where we can see like, okay, we looked like it was taking buys, but now it's looking like it's going to go for sales. So, like I feel like this setup in particular on a 5 minute, that first setup, I don't really feel like that's like a beautiful breakout. I feel like again, I'm looking for consecutive candles to close underneath before I take a breakout for a buy on a 5 minute, and that second one is pretty good. I don't really like taking 5 minute breakouts and the candles are barely closing underneath the 13 before it goes up. You get what I'm saying? I don't really like that. I want to see maybe 2 to 3 candles underneath the 13 MA before it actually closes above. That's really what I want to see. So, yeah.
But
All right. That's all you have?
yeah, I appreciate you.
Yes, sir. All right. We got George. That's the last person that raised their hand, and then we're gonna wrap this up.
Yo,
Yo, was good?
you can hear me good?
Yes, sir.
Word, perfect, man. How's everything going?
Pretty good. Pretty good. Decent week. Gotta keep it
Yep.
going. For
Nah,
sure.
yeah, we did good. Yeah, I went like 4-2 this week, so I'm doing good. So actually the reason for the coming in is just so I'm doing real good. Like I'm basically on track to have my first like 5-figure month
Let's
right now.
go. Let's go.
And that's just um like I'm on track to get a payout next week, but yeah, just between like my 9 to 5 and like trading, I'm
Mm-hmm.
definitely already about to have like a 5-figure week.
Mm-hmm.
But trading's already like, you know, almost 3x in my 9 to 5 right now. So my question is basically transitioning from working to trading full time
Mm-hmm.
and kind of like I'm already like thinking into 2026, like that's where my mindset's already at. Like 2026, I want to have a live account.
Mm-hmm.
Like really just using the prop firms to scale, and then I might just use them for extra capital. But I guess my thing is like, how much percentage or like what, how big should your live account be, or how much should you be risking, like average
Mm-hmm.
risk for like your living expenses and stuff like that,
Mm-hmm.
to where it's like, all right, now I can quit my job. I'm making enough money
Yeah.
consistently where I don't really need to be here no more. Because
Yeah.
my job, I'm making 6 figures a year at my job already.
Exactly. Exactly. So again, if and that's tough because if you're making 6 figures already from your job, that means you got to really go crazy with trading because you're trying to replace that income. So again, it's a case by case because I wasn't making 6 figures working in a factory. You know what I'm saying? So I was able to quit my job with a little under 50K in my live account. That may not be your situation because you already make 6 figures before you quit your job. So I would advise you to calculate all your monthly expenses. I'm talking about phone bill, light bill. Like you need to actually have like a whole spreadsheet on like all the money that's leaving out per month. Like just write it down. Like, okay, this is how much money I spend. And then you need to write down exactly how much you make at your job per month. Whatever you're making, you need to be making damn near twice with profits, okay? Because, we talking about healthcare, we talking about people having families, mortgages. You know what I'm saying? Like let's be real. Like we are humans. We got bills to pay. So you need to be writing down exactly how much money is leaving out and how much money is coming in. And based on that number, you need to be adjusting your contract size on, like I'm not saying that you got to make like let's just say I don't know how much police officers make. I'm just gonna just throw out a number. Let's just say you're making 10K a month being a police officer, and you're on a live account, and your average win is $2,000. That's great. That's absolutely great. Why? Because all you need is 5 profitable days out of 25 to get that 10K month. So you really just need to just calculate, okay, when I go live, how large is my account when I go live? Based on that, I need to be adjusting my contract size so I can at least be hitting that 10K a month to offset me quitting my job. So you got to run the numbers. Like, I don't know
Yeah,
what
got you.
exactly
Like I kind of
yeah.
was thinking like along the lines like, okay, should I be shooting for trading wise? Like try to shoot for making my monthly income as a police officer every week. So like let's say I get five bands a month? Should I be
Mhm.
shooting for like, if I'm having like a profitable week, that's like a 5 band week.
Yeah, I mean, anything if you
Or is
can
that
make.
too high?
I mean, it depends on, your performance. Because if you're
Mm.
hitting that consistently, then that's a realistic goal to hit. But for somebody that's brand new, that may not be realistic. So it just really depends on, your performance every single week on a consistent basis. So yeah, bro, like you don't need like somebody just said like you gonna need 200K. He don't need 200K in a live account to go full time. No, absolutely not.
Because
But
basically where I'm at with my projections, I probably really only need a 50K account. And you know me, I'm on a 1 minute. I'm like
exactly.
my minimum's 1 to 2. I'm consistently every profitable day I have, I hit a 1 to 2. So in my head, I'm like, all right, I'm risking 1,000. I'm on a losing day, I lose 1,000. On a winning day, I make 2,000. Like, so my winners already cover 2 days worth of losers.
Exactly. Especially if you're in a 1 minute. If you're in a 1 minute, then definitely go for a high RR for sure. So
Mm,
yeah, I feel like once you really understand like that number that you spending and that number that you actually bringing in, you got to really be realistic on the account size that you would need. So like you may only need 50K to go live and quit your job and you can start saving it like and also before you quit, make sure you have some money saved up too, like emergency funds, like stuff life
mm,
happens. Like so before you like say if you want to quit with 50K, make sure you got like 15, 10K just sitting to the side, just emergency for something
mm.
crazy can happen. Like you might anything can happen. Like, because your job is going to have all these benefits, but when you quit your job, all of that is done. Like, so you got to have money put to the side as well. And that do
Yeah.
creates a little bit of pressure. That's why you got to really be ready. So, like, when you do quit, like, make sure, like, okay, like, I can't be like when I quit, like, because a lot of people are scared to quit their job because it's going to get a little scary. When you do quit your job, make sure that you're sure about it. Like, you're not like, oh man, I'm gonna go back. Like, no, like when you do it, make sure like I got this put into place. I got savings. I got an emergency fund. I put this to the side. Like, because you want to be prepared when life start lifing. Like, and it happens to all
Yeah.
of us. So yeah, bro.
Yeah, okay, for sure. Yeah, like I already got a Roth IRA put to the side, and then I already plan on like having no debt, no credit card debt, no student loans, no nothing like that.
That's
So
good.
I'll have no expenses. So my last question is basically, and I'm happy I was able to get on because I feel like only you can really answer this because you're in that position. But like,
Hmm.
how hard is it, as a full-time trader to, you know, to buy things, get loans. So I plan on,
Hmm.
within next year buying a house. And so
Hmm.
part of me is like, I don't, even if I'm profitable, I don't want to leave my job yet because I already have like
Hmm.
4 years of payment history. So I should probably buy my house off of my job's income
Hmm.
before I leave. Because if I
Yeah.
come in there and say, hey, I'm making,
Yeah.
500,000 a year. And they're like, yeah, but you only been trading for like 6 months, nine
Exactly.
months.
Exactly. I'm already knowing. So like even like when I first moved to Miami, it was a whole issue because like I quit my job. Like I don't have like 10 years of a track record for like my trading record. So like when I had to like apply for the apartment, like I got denied initially. I had to put more money up front because I have inconsistent income. And people don't be talking about that. Like when you go full time, they're gonna be like, okay, where's like, do you have consistent income? Because if you don't, now you got to put up more money up front. So that's the issue with being a day trader. Like you have to put more money up front just because they want to make sure that they're gonna get their money versus like whether you about to get an apartment or something, whether you about to get a car, like whatever you do, you gotta have to put up more money based on your inconsistent income. So be ready for that as well. Like if you don't have a lot of track record, why would they trust you? Like they're not gonna trust you because you don't even have a whole track record of consistent money coming in. So they just gonna be like, all right, we'll let you get in, but you're gonna have to cough up a little bit more than the average person because they got more history than you. So that's something that does happen, and you gotta be prepared for it. Like saying like buying a house or whatever, anything that you want to put like a big payment on or a big purchase, they're gonna run your credit. They're gonna run like, okay, where are you at? Do you got a good history? It's like, can they trust you with this purchase? Because if they can't, they gonna deny you for sure, and then you're gonna have to cough up more money. So that is an issue for sure with buying a house, car, and any big purchases, like anything over like 50K. Yeah, like they gonna run your credit. They're gonna see if you credible, and they need proof of income. When they ask for proof of income, You're gonna have to show your payouts, you're gonna show your withdrawals, you're gonna have to show your bank statements. They want to see all of that. And that's why I tell people like before you quit, make sure you got it like, 6 months, good track record. You got you some withdrawals, like you got some consistency. You seen all 4 quarters of the year. You traded during a new president, election year. Like all of that matters because when you actually go full time, you're gonna need all of that. You're gonna need the bank statements when you get all your withdrawals. Like you're gonna need an accountant. For my people that don't trade under LLC, open an LLC for yourself. It's not hard. Just go get an accountant. They'll do it for you. Like, and it's benefits to actually trading as a business as well. Like, it's a lot that comes with just quitting your job and trading full time. Like, it's not just I quit my job, I got a six-figure account, I'm good. Like, no, like you want to make sure certain things are into place. So, yeah,
Okay.
bro, like
Yeah.
that's the main issue. You gotta put more money up front if you're trying to buy a house, if you're trying to buy a car or something, or finance anything like that. They're not gonna trust your proof of income, so you're gonna have to put up more money. That's usually what's gonna happen for sure.
Okay, got you. Yeah, because I was thinking about it. I'm like, I'm already projected I'll be ready by next year, but then yeah, I'm
Mhm.
like, all right, if I want the house and all that, I'm like, I figured that was gonna be an issue. So more than likely,
Mhm.
I'm gonna have to keep working, and then once I got the down payment ready and all that, go off on my 9 to 5 W-2s and stuff like that.
Mhm.
Because
Yep.
then once I get it and I already got approved, got the loans, I'm living in the house, and I got whatever car payment, all that stuff. Then they just want me to keep paying the bill at that point. They
Mhm.
don't really care that like
Exactly.
I stopped working,
Facts.
whatever. Yeah,
Yeah.
as you just as your like net worth has increased and as you got a good credit score and all that, as a full-time trader, have you experienced that like even as a full-time trader, you still have to put a lot of money down on things? Like you got to basically buy things cash
No, no,
because
no. No, that's not the case. I'm not
yeah.
a fan of credit. This
Oh,
is just a
okay.
personal thing. I'm not a fan of debt or credit. As soon as I had the opportunity to pay off all my student loans, I did. Like soon as I like any credit card debt, I'm paying it off. Like I'm gone. Like because like that, it's just something that I personally just don't believe in. I don't believe in debt. Don't believe in credit cards. That's just something that they be saying the rich use debt, da da da. But you need capital. Like, and if you don't have capital with credit, then it's nothing. So like you need cash is king. Cash is king for sure. You could use credit to leverage and all that stuff you see on Instagram and all that. I'm not a
Mm.
really fan of it. You need cash. You need liquid capital in the bank right now. That's what you need. You don't need a 50K credit limit and you only got 10K in your bank account. I don't believe in that. That's just something that I don't believe in. So yeah, I mean, I can get approved for a lot of credit cards, like a lot of just crazy credit cards, but I choose not
Okay,
to.
so they because I don't know where I heard it, but I heard that like they see like trading income as like risky, like they don't see it as like
Yeah.
stable. So
Yeah.
I thought just since you have so many years in the game, like you'd be the best like to let me know how was your experience with that. Like, is it as a full time trader, if you go to
hmm
apply for a loan or something like that, are they like,
hmm
yeah, you can have like you make a million, half a million a year, yeah, you can have it, or are they like, yeah, I mean you had a good year this year, but the market we don't really know, like
Yeah,
you
they
know.
definitely gonna give you a hard time, but the longer your track record is, the better that it is. So like obviously I've been training for 6 years, so if I want to apply for a credit card or something like that, and I show them 6 years worth of P&L and broker statements and stuff like that, then they're gonna consider it, but I may not get something that's better than somebody that working 9 to 5 because they got that consistent same amount every week, like, and that's just not day trading. So it's gonna be a couple of hiccups, but you could definitely still get approved for stuff for sure.
Okay.
Yep.
All right, perfect. That was my question. Thanks, man. Appreciate it.
Yes, sir. All right, y'all. So let's go ahead and wrap up this webinar. That was a great question for anybody that want to go full time. I know my boy, it's just a matter of time before he quit his job. It's a matter of time for a couple people in here quit their job. And I definitely recommend for you to get an accountant when you start to really, get these payouts, get these withdrawals, because it's gonna happen. And you're gonna feel like, all right, like what do I need to do? Like you're gonna start asking around. And I feel like this is important to know before you actually go full time. All right, let's go ahead and look at the news for next week because we're gonna go ahead and wrap this webinar up. This week was pretty good. We gotta keep it going. Monday is a bank holiday. What the hell? Oh, it's Columbus Day. Oh yeah, I forgot. Okay, so yeah, probably not gonna be trading Monday. because the bank I don't like to trade on bank holidays, but I'm not gonna be surprised if we see a setup on Monday. So definitely trading. Ooh, Paul speaking on 11:30 Tuesday. Definitely trading Tuesday and Thursday, and another. See, I don't know. I'll let y'all know my schedule because how I'm feeling, I kind of still want to trade on Monday. I feel like things gotta switch up. Like things is changing. Like I feel like every time I be like, I don't want to trade on a bank holiday, something beautiful happens. We might still may have a live stream on Monday. Like I see this, but things are changing. The market is different. Like, and we gotta do different stuff. So don't be surprised if we have a live stream on Monday. Like I see this, but do we really care about Columbus Day? No, we don't. Um, so yeah, that's pretty much it. So possibly gonna be trading Monday, definitely Tuesday and Thursday for sure. Friday, they keep pushing back NFP week. Like at this point, I don't even care about it no more. Like whatever. Like it is what it is. We just gotta show up, be consistent, control our risk, and keep doing what we're doing. So all right, y'all. I'm gonna go ahead and end this live stream. I mean this webinar, and show up Monday. Good stuff this week. If you had a profitable week, if you didn't have a profitable week, review your setup, see what you could have done to do better. Of course, for my people that trade on the 1 minute, keep doing your thing. Keep being disciplined. For my people that trade the 5 minute, keep doing your thing. If you don't trade breakouts and you trade supply and demand only, keep doing your thing. Whatever that's paying, let's do that. Like let's not even overcomplicate this stuff. Whatever that's working, we're doing that. Like supply and demand not showing up, okay, breakouts, boom. Breakouts not cooking, okay, we do this. Like we're gonna keep adapting to whatever's going on in the market, and we're gonna find a way to get wins regardless. So, all right, y'all, I'm out. I'll see y'all on potentially Monday. Not gonna guarantee it, but potentially Monday. We might have a live stream on Monday, so get ready. All right, y'all, I'm out. Have a good weekend. Peace, y'all.